Hello everyone. Welcome to this Pangea-Risk webinar. My name is Orbitt. I am the CEO of Pangea-Risk. Our previous company, EXX Africa, rebranded at the end of 2020 and is now called Pangea-Risk. We provide analysis and forecasts on political, security and economic risk in Africa and now also the Middle East. And this is indeed the topic of my conversation for today's webinar. I will provide a geopolitical overview for both Africa and the Middle East for 2021. These are of course huge regions and it's a lot to talk about, and I only have 20 minutes. So I will only be sharing some of our key forecasts and perhaps some of our most surprising intelligence. In 2020, Africa's economy saw its first recession in 25 years. The economic downturn will see at least $115 billion in output losses and may push 40 million people into poverty according to the World Bank, reversing at least 5 years of progress in this regard. Some of Africa's largest economies, like South Africa, Nigeria, Angola, and Kenya, all witnessed annual contractions over the course of 2020, and only very few West and East African smaller economies saw marginal GDP growth over that year. So now our key question must be, how fast can Africa recover in 2021? Well, the good news is that based on current forecasts, about 9 sub-Saharan African countries are set to perform at 6% GDP growth or more over the course of this year. These include countries like Mauritius and Botswana, which saw some of the deepest annual contractions in 2020, mostly because of a sharp drop in demand for their foreign exchange export-generating sectors. For Mauritius, this is tourism and aviation, and for Botswana, this is of course tourism alongside diamond exports. Both countries, of course, will depend on a recovery in the demand for those key export sectors. However, a number of other African countries, particular hubs in the west and east parts of the continent, are set to do well and recover quickly in 2021. These include countries like Djibouti and Rwanda in the east, and Niger, Guinea and Côte d'Ivoire in the west. In fact, the IMF and others are still adjusting forecasts for a number of key countries for this coming year. The IMF recently upgraded Kenya's growth forecast for 2021, which should now be at around 7%, which will make it one of the largest and best performing countries over the course of this year. That said, a number of African countries will still record lackluster growth or remain stuck in annual recessions over the course of this coming year. This is particularly so for countries like the Republic of Congo and the Republic of South Sudan, which are failing to steer away from oil dependency. Similarly, Nigeria, Africa's largest economy and largest oil exporter, is failing to diversify away from dependence on oil. Similarly, Mozambique is still suffering from its 2016 defaults, as well as failing to see a swift development of the LNG sector in the northern regions due to insurgency in those parts of the country. Most worrying, perhaps, are Zambia and Ethiopia, which used to be champions of investors in Africa. Zambia defaulted on a Eurobond repayment at the end of 2020 and is now set to continue to default on much of its commercial loans as well as its Eurobonds. Ethiopia is seeing the long-term effects of an economic system that has fallen out of balance, massive foreign exchange shortages, as well as the effects of the Tigray war at the end of last year, and more on that later. However, generally speaking, most of sub-Saharan Africa has seen an improvement in its country risk rating over the past few months. At Pangea-Risk, we provide quarterly updates to our quantitative risk scores, which are forward-looking ratings of a country's risk outlook. Here you can see these risk ratings represented by distribution and proportion. At the end of 2020, we rated about 80% of sub-Saharan countries to be either at severe or high in terms of their risk outlook. However, at our most recent quarterly update, we now rate about 65% of countries to fall into these categories, and instead we are seeing African countries now more falling towards the elevated and green, more moderate and elevated risk ratings. This is good news for Africa, particularly if Africa can indeed improve its country risk outlook. It is set to move towards an economic recovery in 2021. So, if we are going to see an economic recovery in Africa this year, we will have to watch a number of key risk indicators, and there remain a number of uncertain variables which we will have to monitor. I point out 3 of those in this presentation, one being the coronavirus trajectory, which remains highly uncertain, as well as there's a lack of clarity over the equitable distribution of vaccines. Secondly, we have to monitor the political and security risk outlook for a number of countries, particularly those holding elections, as well as those stuck in persistent states of conflict. And thirdly, I would argue that the continued multilateral financing provided by institutions such as the World Bank and the IMF will be crucial to drive an economic recovery this year. Let's look at my first key indicator. The coronavirus is now fast approaching 4 million cumulative COVID-19 cases in terms of its trajectory in Africa. Most of these have focused on Southern Africa, particularly dominated by South Africa, which accounts for about 40% of cumulative cases of COVID-19 in Africa. The second main region of the disease distribution is in North Africa. Currently, Morocco is most affected, although Tunisia has a higher death rate. And there are still second coronavirus waves enveloping the eastern and western parts of the continent, particularly around the main population hubs in the east and west. There is a fear that there will be a third wave, particularly for South Africa, as it moves towards its winter months in the next quarter or two. As you can see here from these infections per day charts, we are now very much firmly seeing a second wave in Africa. And at the same time, we're seeing an increased death rate. Africa's death rate now for the first time marginally exceeds the global death rate. In terms of forecasting, the impact that the pandemic and its associated effects will have on the country risk outlook for African countries, Pangea-Risk has created an impact model that includes the country risk ratings, which I showed you earlier, as well as indicators of economic volatility, data about the COVID-19 pandemic, and a number of other key variable indicators. Based on the latest model, we can see that some of the smallest countries in Africa, like Benin and Togo and Rwanda, are set to have the least vulnerability towards the broader pandemic and may therefore indeed see a swifter economic recovery. However, a number of countries that are stuck in conflict states or that went into the pandemic already in economic and political crisis are the most vulnerable. Indeed, in Tunisia, we are seeing continued protests against the government. In countries like Zimbabwe, however, Pangea-Risk has been quite adamant to forecast that this country is the least prepared in southern Africa to move into a second coronavirus wave. And indeed, Zimbabwe has occupied many international headlines over the past few weeks in terms of its lack of preparedness of dealing with the pandemic. So there is a real diversion between countries that are prepared to continue dealing with the pandemic and those that are certainly not. The second indicator that needs to be watched is political and security risk affecting Africa in 2021, as a number of African countries are moving or holding elections this year. Niger may see a peaceful transition of power for the first time in its country's history. However, other elections are being held in a state of conflict, like those in Libya or South Sudan, or others, like Zambia's, may try and duplicate the pattern of electoral manipulation and violence set in Uganda in January. Then, a number of local and legislative elections may be even more important to watch. Angola, which has seen a spree of unrest since August 2020, is holding its first ever local municipal elections. However, Pangea-Risk has already discovered through its survey in 2020 that there has been a real drain away in support from the MPLA ruling party over the past few years. Similarly, the delayed legislative elections in Ethiopia will be key to watch. In the Horn of Africa, we have seen a real destabilization of the current security and political indicators. The Tigray War at the end of 2020 has essentially fractured northern Ethiopia with varying different spheres of influence between the Amhara ethnic regional group, which supports Ethiopia's federal government, as well as Eritrea, which has got an alliance with the federal government in Ethiopia, and rival forces and militia in Sudan. And here, in fact, over the past few weeks, we have seen an escalation in a long-running dispute over land rights between Sudan and Ethiopia in the Al-Fashqa border region. And we have seen an escalation of violence as well as concise troop movements from both countries moving into this area. Indeed, the whole Horn of Africa may see a destabilization over the course of this year if these disputes continue to escalate and could, in fact, impact the negotiations on the Grand Ethiopian Renaissance Dam. Two other examples to mention. I would certainly pinpoint the insurgency in northern Mozambique and indeed southern Tanzania, because here we are seeing Africa's largest ever investment going into the liquefied natural gas industry. Increasingly, attacks are targeting not just local communities, but also the peripheries of the LNG mega projects. And then final example would be the continued violence in the Central African Republic, where rebel groups continue to choke the capital Bangui in an effort to seek a transition of power. And this may indeed drag in a number of regional countries like Chad and Sudan and Congo Republic, as well as non-African countries like France and Russia. And the third indicator I would highlight is that continued multilateral financing for Africa remains crucial to see an economic recovery. Indeed, over the course of the pandemic, we have seen multilateral financing going into Africa from the IMF and the World Bank at record rates, as well as local DFI such as the AFDB African Development Bank and a number of other sources of multilateral lending. However, this is not the only initiative in place. The Debt Service Suspension Initiative, offered by the Paris Club and G20, is attracting more and more African countries to participate. Indeed, Kenya, which was mostly reluctant to join the DSSI, has now indeed joined it and could benefit for up to $630 million in suspended debt interest payments. Ethiopia, similarly, can benefit up to $500 million, but the biggest beneficiary of the DSSI will remain Angola. We have to ask, in terms of the trajectory for sovereign default risk this year, will there be other countries joining Zambia's path to default? Well, certainly we are seeing countries like Chad and the Republic of Congo nearing default status, although a number of these countries, like Chad, are joining a new common framework between the Paris Club, China, and commercial creditors. Ethiopia may also soon be joining this common framework, and this will lead to restructuring of debt rather than only suspending debt service payments. However, in terms of the DSSI, we have to remember that not all countries qualify for this, and it only pushes back debt payments to the middle of 2021. Therefore, the importance of restructuring debt between the Paris and London Club, as well as China and other major creditors, will be crucial as we move through the course of 2021. So let's now look at the key drivers of risk in the Middle East and North Africa. Indeed, it is North Africa that will be driving GDP growth for that region over the course of this year, particularly countries in the Maghreb, Morocco, Tunisia, and Algeria, as well as Egypt, which will see a sustained GDP growth over the course of this year. However, I remain skeptical to the extent that Turkey's government will commit to implementing its new promised fiscal and monetary reforms. Therefore, I remain skeptical that Turkey can indeed remain the fastest growing economy in the Middle East and North Africa region. In terms of the worst performers, it is countries stuck in conflict like Yemen, but also countries that have accumulated large debt burdens over the past few years, and particularly during 2020. These include countries like Kuwait and Oman. Kuwait, in particular, is not able to provide debt sustainability without some sort of parliamentary approval, which remains currently lacking. And then we need to look at the political risk outlook for the Middle East. Here, this will be driven by the elections in Iran. Now, the Iranian presidential elections will not be determined by regional factors, but by domestic socio-economic grievances. This means that conservative elements within Iran are more likely to return to power. And this will, of course, impact the probability of Iran rejoining the JCPOA nuclear agreement. It will also impact regional security in terms of a proxy conflict that is escalating with Israel and particularly being fought out in Syria. And, of course, it will deteriorate relations with Arab Gulf states. It is worth pointing out that Iran, just like Turkey, has one of the largest proportions of cumulative infections of COVID-19 in the Middle East region. And this will also be a key indicator as the country seeks to acquire vaccines. In the wider Middle East, a new issue is the accumulation of debt. Even before the economic volatility and the oil price drop in 2020, have Middle Eastern and Gulf states sought to increase their debt. And here we have a number of different scenarios for different Gulf states. Indeed, countries like the UAE, Kuwait, Saudi Arabia, and Qatar will be able to tap into some of the largest sovereign wealth funds in the world. However, countries like Bahrain and Oman will have to rely on their wealthier neighbors in order to ensure debt stability. Indeed, we may see further debt defaults in the Middle Eastern region, just like Lebanon's last year. And then on a final factor in terms of Middle East security, it's worthwhile noting that the proxy conflict playing out in Yemen may potentially be drawing to a close as negotiations proceed. However, the attacks on Saudi marine and oil infrastructure assets are increasing in frequency as well as distribution, where more attacks are spreading northwards and even southwards from the Red Sea region. Now, it goes without saying that when conducting a geopolitical overview of both the African and Middle East regions, we have to look at the interactions between those two regions as well. And this is one of the main drivers of Pangea-Risk forecasts as well. Increasingly, the Middle East has become a hub for trade and investment, not just from Asia, but also directly between the Middle East and Africa. In fact, the UAE, for example, is now the second largest investor into Africa in terms of its number of investment projects. Then, increasingly, Middle Eastern countries are stepping up regional competition, particularly around the Horn of Africa, as well as other parts of Africa, in their investments in African ports, food security, and other broader infrastructure projects. We believe that this type of collaboration between the two regions will be a major factor to lead or drive economic recovery for both the Middle East and Africa over the coming year. And indeed, this will remain a focus for Pangea-Risk going forward. Many of the stories and context that I mentioned today are now provided free to read on our website pangea-risk.com, and you are free to look at some of our reports that are unlocked on our website. If you have any specific questions, or indeed you would like to receive a copy of my presentation, please reach out to us and email insight@pangea-risk.com, and we will gladly send you a copy of this presentation or address any further questions you may have. In the meantime, I'd like to thank you very much for your attention, and I wish you a safe and healthy 2021.